The digital transformation that banks are going through is going to change the bank's business model completely. And this is a really exciting part of the next few years of banking. Specifically, in the technology space, we have the Googles, the Apples, and the Amazons that are really formed kind of like platform companies. And they are able to deliver very personalized experiences to their customers. In the past, banks have really interacted with their customers through their branches, and that's been the point of contact. What we see is that the banks will move towards more of a platform type approach. And there'll be banks that'll be financial platforms. There'll be banks that'll be niche players on financial platforms. And there'll be banks that'll be utilities or service providers to those platforms. And ultimately, it'll allow the banks to move from the mass services that they offered through the branches to more customized services that they'll be able to offer through these digital platforms. Bank regulation has always been a very significant part of the industry and the way the industry is changing. The industry needs to change to adapt to the new regulations, and there's a lot going on right now. There is a general relaxation of some of the key Dodd-Frank and crisis era regulatory initiatives, which really might open up a lot of opportunities for the banks. It's very interesting that the bank regulators see this and they understand it. Like, one of the number one regulatory risks that the bank regulators are following now is strategic risk. And they're thinking about, are the banks who are now trying to pivot from reacting to the crisis to growing and meeting the customer demands, do the strategies that underpin those steps, are they being adequately controlled and managed from a risk management standpoint? So one of the key things for banks to think about from a regulatory standpoint is, are they able to answer the question that their regulator might ask is, are you managing your strategic risk well as you enable these different growth initiatives? The second piece I would highlight is that the bank regulators have been very focused on conduct and culture. And this is really something new since the crisis itself, where the regulators are convinced that banks need to think more about the conduct of their employees and the culture and the environment that they've created. And I think in terms of the changes as we move forward, answering the question of how are you managing your strategic risk and how are you managing your culture and nurturing the culture to create the right environment to be successful will be really key. Bank boards should focus on the strategy that their banks are trying to initiate and the risk management capabilities to control and challenge the implementation of those strategies. Matter of fact, the Federal Reserve recently released a new heightened set of expectations for bank boards, and it really focused on that nexus between the strategic focus of the bank and the risk management capabilities of the bank. And that the expectation that the regulators have is that the bank boards are going to be evaluating and oversighting whether or not those risk management capabilities are consistent with the actual strategies that are being implemented. And if they're out of whack, they need to try to bring them back so that there's more kind of an equalization between the two activities.